that'll put the bottom part at 1856 and 3/4. And so let's talk about yesterday real quick, and then first let's talk about today and where I'll be looking for trades. So given that it looks like we're going to open very strong, okay, so let's go through the most important part of the day, which is often the open, and that can cause significant amount of trouble. So we're looking for a potential open drive, obviously on a gap. What is an open drive going to look like? It's either going to be one very strong bar followed by two smaller bars, the hallmark of which will be that the first bar, the low on that first 5-minute bar, will mark, generally speaking, the low of the day. That's the first clue. So if this gets breached, if we have an open drive, right, and generally that bar will be anywhere from 4 to 7 points, the first bar, there'll be almost no rotation lower. Secondly, that 5-minute bar won't be breached. If it does, there's a different scenario on the table, right? Almost no rotation lower. The tick will be and remain very positive, meaning we will remain above 0 tick for the majority of the first hour. And generally speaking, and this is mostly my coaching clients, but the NYC tick will, the 0 tick in that circumstance, right, will be our first entry, or probably our best entry to the long side, right? Because we're not, for those of you that are new, I do not chase these. I do not try to get in and chase these to the upside. The other issue that we'll be looking for, right? The other way that this can look, by the way, on open drive is it can simply be 3 solid bars up, right? Again, with the first bar having the first being the first 5-minute low, and little to no counter rotation. I do want to point out that we have pretty sizable econ coming out at 9 a.m. In both pieces of data could be market movers. What that sets up for, given the size of the gap, by the way, is that we could simply have a sideways market moving into this, and then at 9 a.m. Either have an open drive at that point higher or an open drive lower. Okay, so that is something to keep in mind, and I will show you, I believe I want to say it was last Wednesday, but I might be wrong. We had a similar situation. Econ data came out, and we had an open drive at 9 o'clock. I'll go find that example and show it just a moment, right? The other indications of strength, obviously we're opening approximately up here at 1858 3/4. Might be higher if we continue moving. There's no white zone yet, and I haven't established a white zone because the Globex high keeps moving around. So to this point, there is no white zone. So the first thing we'll be looking for in strength, right? Half gap. If we open at 1858, the close was roughly 1849 1/4. That's roughly, let's see, 1858. Let's call that 1849. That's roughly 9 points. Let's call it 10 points. So 4 to 5 point rotation back. If we find responsive buyers, that would be half gap, and it would be a sign of overall strength. And then we have full gap right here, right? If we're unable to get below, if we come in for gap fill and we find responsive buyers there, okay, that would also be a sign of strength. One of the things that I was pointing out is that when we go to range trade, that we can tend to travel from the top of the range to the bottom of the range and back to the top of the range relatively quickly. And you shouldn't confuse that with breaking out, okay? And often as well, we'll often end up with balanced days on those days within the range. And so the extremes tend to be a good place to put trade location. So if we open up where we're trading right now, 1858 3/4, the first place that I'll be looking for to place a trade, at least with confidence, will be this 1871 to 1873, meaning I can tell you right now I'll be placing a trade in this location. I will also take a shot when we get up to the new highs. Remember, when I'm taking these trades, I'm looking simply for a rotation down for 2 points. If you're someone who has trailers, and this is mostly for my coaching clients, as you know, take your 2 points. If you're leaving trailers, decide whether you're going to move ahead of time. If you're going to leave your stop where we were originally, 2 points behind the zone is where I leave it most of the time. If you're going to move the stop to break even, or if you're going to move it to net break even, which is a compromise between these 2 points, to see if the trade will survive and move back into the middle. I'll have to see where we're at when we get closer to the open as to how eager I'm going to be to take this zone. I want to see the price action and where we are relative to 9 a.m. on this particular zone. On the downside, if wherever we establish the Globex high, right, if we're unable to clear Globex high out of the gate, I would expect us to come back in and tag gap fill. Okay, certainly half gap, if not gap fill. Again, this is if we're unable in the first couple of minutes to clear Globex high, and or we trap, we get above and we trap back below, right? I would expect to trade back down to the other end of the range. On the downside, where I'll be looking to trade, I can tell you right now, I will definitely be taking a trade at 1831.50 to 18. I got to correct that, 1833.50. This should read 33.50 to 31.50. And the gap fill, at least by my view, is at 1833. There is support throughout this 1831 up to 1833 area, all up and down this area. So the only thing that would give me concern is if, like yesterday, we consolidated right above the zone for 15 or 20 minutes and then made a move in. That would force me to the middle, to the back of the zone, as opposed to the front of the zone. But this is an area I'm willing to lose money. Also, a retest of Monday's low, given the assumption that we're going to hold up here at 1858 for an open, I'm willing to take a long trade here as well. And then really pretty much every zone below, I'm looking for a rotation higher. And I don't think we're going to stretch very far below this strong support. I would really expect responsive buyers here. If we don't get responsive buyers here, and that would be a cause for concern, and it would require strong stretches below here. In other words, if we get below strong support, I'm looking for 10-point rotations below here to take trades, as opposed to tighter 6-point rotations. Same thing with the upside. If we're holding above Globex high, right? If you're a very aggressive trader, 6 points should work for you just fine. If you're not as an aggressive trader, you should rotate out to 10-point intraday measurements, swings into these zones. You have to decide for yourself. Another thing I want to address, particularly amongst I have a few newer clients, right? Just because I'm taking a trade, first of all, I don't call out anywhere near the number of trades that I actually take. I usually have 3 or 4 markets up on my screens at the same time. Secondly, I would consider myself very aggressive in terms of the trades I'm taking. So I'm not necessarily calling out the most aggressive trades, and the idea is not to get y'all to trade like I trade. The idea is to get you consistent and have you be able to make your own trade calls with the ability to trust yourself that you know you're taking these trades in the proper area. And that either requires paper trading at first, trading small size so that you can build trust, and keeping up with your spreadsheets so you can visually see the data for yourself that supports that these zones generally give you a pause, right? And a good deal of time, a 2-point rotation lower. Given the last 2 or 3 weeks have been difficult because of the open drive scenarios that we've been going through. However, the gross majority of the time over the really for years and years now, I expect a pause and a rotation, just like we got yesterday at the zones, either a pause or a rotation. I'll give you an example of that really quick so everyone's clear. Where was my trade from yesterday? Let's see here. Is this it? Here we go. Okay. At the open, first of all, we had a trap trade going right here, right? First rotation down to the top of the zone right here yielded 2 points. Okay, it's not a very nice 2, but there you go. I highlighted that this zone was a potential problem area, prior to the market. We had consolidation right in front, okay? But even without that, 5, 10, 15, 20, 25 minutes. Start your timer as soon as that zone is hit, okay? I usually am able to get a 2-point rotation, just like I was able to here, in under 15 minutes, and certainly within 25 minutes. And that will minimize your losses a great deal of the time, okay? Then next we came into this zone. You can see we spent 15 minutes in, rotated up, got the 2 points. Actually, I had a 2 and 3 point scale, and had I lifted my original stop, the 2 points, which I didn't, I was planning to take a swing down from levels below. I did not take that swing. What was I going to say? Oh yeah, had I left that there, I obviously would have had a very nice swing. We trapped above, and then we moved for a backside test to 1855, which I pointed out was a breakdown retest. And then you can see we're trading right now this 1858 and 3/4. It's just under this 1860 level right here, and you can see that's where we had structure sitting right here prior. Really, there's not a lot above to hold us down except for this rejection area right here at 1864.50. The highest area, and I might actually, I'm not sure that I'm going to adjust this. The reason why the zone's here and not here is because there's nothing up here to hold us down, really. This is the last area where we really had any kind of significant volume. I'm going to go back and look. I may need to put, actually, just so it is clear, one more zone right here. Not a zone, but a line that calls that above this point, there's new highs above. Let me make sure here. Let me pull this down a little bit more. Ah, that's why I didn't do that. Okay. And right now I have this, excuse me, where were we, 1887, 87? This was yesterday's white zone, got confused for a moment. And then you do want to mark off, by the way, the all-time high. Here, I'll show that here. Wrong chart. Here we go. You do want to mark off that there's new highs above 1877 and 3/4. If we get there, it would be an amazing stretch to get new highs today, right? If we're at 1858 and 3/4, this would put us right at a 20-point stretch. Majority of the days, the market has gone from 20 to 30 points on our biggest days. So the housing data that comes out at 9 a.m. is going to have to be incredibly strong to push us beyond this point. What this will most likely look like when we get up here would be my guess. If we get up here, will be that we reject the first time through, and then we kind of get a basing period like this, and then a breakthrough. I'd be cautious if we get this about shorting above this point today. If we actually break out, it would mean that there's a lot of shorts trapped. And when I say shorts, I don't think there's professional shorts, but there are cash shorts, meaning people who prefer to be in cash and invested in the market, and it would force money off the sidelines. Pretty much everyone I know, except for trend traders, to their credit, are seeing damage having been done and are looking for a move to the downside. Let me see if so to be clear, just one more time, right? I'll take a trade here. Oh, excuse me, scratch that. I'll take a trade here, take a trade here, take a trade here, and probably if we hold up at 1858 into Globex low, I will probably take a trade today, and I'll take a trade at strong support. Those are pretty much 6 areas that I'm highlighting. If I was going to skip any one of these areas, it's going to be this area right here is the weakest. These two are fine, okay? And then I'm also looking for the trap trade. What that means is if we trade above Globex high and then back down, right, I'm going to look for us to go to the other end of the range, right? Also, and I need to insert an area here because of the this I didn't mark it, but this is Friday's high. It's another point where we could trap, and you may want to mark that out, which means we have 2 points of trap here and here. So if we get above Friday's high, we come back in and we break back below, I look to the other end of the range, which is Monday's low. Obviously, that would require that we trap below Globex high as well. Okay, so the way I would manage that, if I took a trade from here and I take my scale, I'm going to want to see if I can get below Globex low on my Globex high on my trailer, so I can see if I can get a push down. First of all, the Globex low, and then a push lower to Monday's low. And I want to address one thing particularly. Again, this is primarily directed to my coaching clients. This is a harder trade to pull off, meaning the trap trade is difficult mentally, because what it means is the first time we come into Globex lows, right, it creates a mental issue. You know that there's going to be responsive buyers here, okay, to push back up. and you have to decide beforehand whether you're trading it, whether you're going to take this trade or not. In other words, we look for a 2-point rotation, then a snap lower. Same thing at Monday's low. You know that there's going to be buyers there and that we can rotate right back up before breaking lower if this scenario occurs. Okay, so it's a little bit tougher trade. Again, at Monday's low, I would have the majority of this trap taken care of. If I'm short from here, I'll have everything gone by this point. This will be in excess of 20-point rotation lower. It would be a huge payday, obviously, and I usually don't talk much about that. But I did want to say, again, have that plan written out beforehand as to which trade you're taking, right? How are you going to scale this, okay? And what your plan is to deal emotionally when you know that we're getting to a zone that's been untested and we're likely to at least get a rotation higher, okay? Because you don't want to get emotionally upset, which can cause you to take poorer trades after you've executed that trade. By the way, the executive part of the summary is done as far as the 2-point rotations. Again, I'm going to highlight those one more time. Here, here, maybe here. This is yesterday's high. We didn't spend very much time here. Globex low, assuming we hold this 1858 3/4, and again, Monday's low. And I will definitely be taking a long from here. So those are pretty much 6 points. And if you eliminated this one, 5 points from which I'll be taking trades. Wanted to address one other thing. After the 9 a.m. open, okay, keep in mind 9 a.m. open, 9 a.m. data release, the market can be on pause until that point, which means we'll get a lot of whippy action both ways, and then the data releases, and that's really when the day starts. I want to see if I can find that example real quick, so I'm going to pull up a chart and show you all what I mean by that. Okay, where were we? Right over, This was the day that I was referring to. You should have this highlighted. Here's where the 9 a.m. data came out. We started driving a little bit in front of that, but really 9 a.m. data came out. You can see we set a marginal new low. It won't be as clean as an open drive out of the gate, but you can see we obviously had 3 solid bars straight up. With this strong bar, we were above the prior day's close. I do not know where Globex high and low was for the day. We rejected off of this structure right here down, but it was pretty much trend day up with very small rotations to the downside. You need to be aware of this possibility, both up and down. The other thing that I want to point out is on most days, and we'll go through it right now, if you look over the last 2 weeks, the opens, we've had some open drives, but we have, so we had a series of open drive, not an open drive, right? And then we've started to have, in the last couple of days, failed open drive, reject out of the open, okay? And then we'll see what we get today. Remember that just because we're gapping does not guarantee an open drive higher. And if we go back prior to this, back in here, the open drives, we're getting some failure. Okay, so I'm starting to see some gap and then failure to the downside. We're getting a lot more gaps and failures to the downside. It's a new wrinkle in the market. It doesn't mean that we can't continue to have these open drives higher. It just means that that push out of the gate is not a guaranteed push out of the gate anymore, and that you want to be cautious if you're one of those traders that's just buying the open, looking for that open drive. You want to be cautious with this and make sure that you're actually getting a true open drive. One of the signatures of a true open drive will be that we will clear the excuse me here real quick. Wrong date. Put the other one. We will clear Globex high pretty much in one of those first three bars and hold above Globex high, perhaps a backside test of it, but we will hold above that. That'll be one key sign of strength of a trend day up. So if you see that trap right out of the gate, you have a pretty good idea that we're not going to have an open drive, and it's become very common in the last couple of days to get these to fail to the downside. So again, just have patience with that open drive and make sure that you have a true open drive. And make sure that it's meeting all the criteria. The other parts that I wanted to point out, okay, on all of your charts, I would have a trend line going from here to here. This trend line, okay, again, I don't trade off of trend lines per se, but in order to have a down day, we got to get below and hold below this particular trend line. I would have it sitting there. There's actually a channel, but I'm just going to go with this trend line right underneath, right? And then I have, particularly the clients I sent this out, but I'm going to show y'all a bigger picture here and then turn this kind of naked. Hold on one second. I want to show you what it looked like yesterday. Okay. This is the same chart that I put out yesterday, but I drawn all these trend lines on them. And then I basically stripped the zones away. But what you can see is we opened right against this moving average that goes back. It's part of this channel that's been going for a couple of weeks now, these two blue points here. And you can see we made an attempt. We didn't quite get there. Also important in this chart is this 1855 area. If you look on an hourly chart, you can see that we've been rejecting from that consistently, both to the downside and back up to the upside. And it is a point of interest. However, if you also look on the hourly chart, it hasn't necessarily been the easiest place to place a trade. And the reason why I say that is you can see yesterday, while we did respect it in the afternoon, we blew right through it in the morning, okay? And that's why it makes this area, really this 1854 to 1856, it makes it a challenging area to trade in, because anytime a zone gets traded through like this, it's uncertain as to whether or not we'll get rejection or not. One way that would make it easier in this area to take a trade is if we have a good sized rotation down into this area, meaning 10 points or more. If you look here, this is a rotation from essentially let's call it 1862 down to 1855, right? So that was a 7-point rotation. This rotation here was from essentially 1842 all the way up to 1855. It was pretty much a 13-point rotation in, which is why we most likely got rejection down, but you can see overnight we traded right up through it. So this is an area to watch. It has to set up properly in order to take a trade in this area, and so caution there. You'll also notice this is just below, or excuse me, just above gap fill. Because of the market trading through this area so frequently, it's certainly possible to get gap fill and then just trade straight back up there and have no resistance in this area whatsoever, because it is getting traded through so easily. So you'll want to go to your higher time frames. You'll notice that we rejected right off of this downtrend. This downtrend, how am I doing on time? 8:16. Okay, I want to go over to NQ real quick when I'm done here. This downtrend was simply established from the prior day, and it was respected all day long. We tagged it right off the open, and then we tagged it again right at 1855 and rejected it down again. By the same token, this trend line, which was respected, is we're now trading obviously well above it at 1858.75, right? So the first time down, right, and we get a backside test of this, either from this location or this location, would not be surprising to see responsive buyers. So I want to be clear. I'm not bearish here. I'm not bullish either. I think we're going to be in an extended trading range, and so I'm looking for the edges to trade off of. Just like yesterday, I was looking down here to try to get long. I am looking for edges to get short up here and long near the bottom for consistent trips back into the middle. And that's what happens when you get into an extended trading range. It's great. It's fantastic money. You can make a ton of money. If we stayed here for the next 2 months, I'd be totally grateful. 30 or 40 point trading range is fantastic. So if we look at today's, and I have that I sent out to my clients that have trade station. I haven't published this chart, but I'm going to have marks all over this thing. There's a larger trend line that goes from the highs where we rejected on, what's today, Tuesday, Friday, okay? Would not be shocking to see us trade up into this area, this 1863. Also, there is a trend line that extends to a lesser degree, but was containing. Okay, so let me narrow this down so people can see it. This range right here, that's highlighted by these two red areas. Okay, we've been in that range consistently. We fell out of it. We've recaptured it, traveled back up to the other side. Right, we came back to the bottom of the range, top of the range. We gapped out of that range and fell back in. Right. The top of this range right now is sitting right here at this 1863 to 1866. Okay, we're just outside of this area right now. And so to get an idea of what that would look like if I stripped everything away. Oh, also, of course, this downtrend that took place from yesterday. Okay, and then you need to add this uptrend right here. What that looks like today, if we remove everything. Because when you have that all on there, it's kind of hard to make out everything. So I go in there, copy it, okay, and that's what you're left with right there. That's the simply the skeletons of the potential support and resistance points. I have no idea which one the market will respect, or if it will respect any of them. Right? We could simply have a situation where we blow right through it, but it's tended to respect this area right here, and obviously that's sitting right now just at this point. It doesn't have to stop, but you have two trend lines that have been established. One from Friday, and this is a much longer period of time. It wouldn't be shocking to see rejection from this point. Same thing on the downside. This is right where we have, just below this, we have this strong support. It would not be shocking on a downside move to see us break, come down, get support, and then move back to the other end of the range. We've been doing this for actually a couple of weeks now. So keep that in mind. Also, the other thing that I want to touch base on before I move over to NQ is, where was I going with this? Time frame. Okay, so let's go back to this chart here. I'm going to minimize this. Where's my base chart? Right here. Okay. if you looked yesterday at what time the market started to have less of a downside move, you'll see right here, starting at 9:30 a.m., right? Look how the market started to flatten out here, right? Prior to this, we're pretty much in a solid downtrend, okay? We started to flatten out. Why did we start to do that? Because this is the hour where institutions are looking to come back in and snap things back to the other side. It was an extended period of consolidation here, which was actually a cause for concern. I stated several times we had to get above this first hour's low, which was sitting right here. We rejected multiple times, but once we got above that first hour's low, we went ahead and pushed right back to 1855. And these are good moves, by the way, guys. These are all, there's various trap trades being set up in here, and they're all very, very tradable, okay, with very good risk reward ratios. But I'm concentrating on this time frame right in here for potential reversals. I'm not establishing positions after 11 a.m., but if I'm holding, I'm still looking for a potential reversal back to the upside. And the majority of days when we're trading in range, which is my assumption right now that we are trading in range, the majority of days go like this: push higher, down, back up to the bottom third, and there from there in the afternoon we either continue climbing, we trade sideways, or we move lower. If we get the tick, and when I see tick, if you look starting right about here, went to plus 500, minus 500, and we ended up balancing all afternoon long, right up to the end of the day. We just went to a balance with an upside bias is all we did. But you can say that it's still balanced, and the reason why I say it's still balanced is look at these small little rotations, right? This is categorized, when we have these small moves like this is a hallmark of a balanced market right here. Okay, it just kind of makes small moves up, small moves down, chops the hell out of impatient traders, right? As opposed to getting these directional moves, which we tend to get in the first hour to hour and a half in the day, and they are money. This rarely extends beyond 9:30 in the morning. This type of trade action is much more common, requires a lot more patience, and is generally harder to make money in, right? Let's jump over to NQ really quick. Let's see. Okay, I'm using a skeleton chart on NQ. Obviously, I need to push this up to 36.27 3/4. Okay, so obviously we've adjusted that. That's now Globex high. This is the skeleton that I use to set up potential traps, right? So on NQ, a couple of things to note. Okay, take a picture of this, guys, print it off, have it posted next to your computer. Open drive lower. NQ has led us both up and down. That is an open drive lower. It was a heads up. Yesterday, we were trading below the prior day's low before ES broke its prior day's low. Okay, it has led this thing down all the way. Also, prior to ES reversing, when ES was making new lows, here I'll switch back to show you that really quick. ES was making new lows in here. See if I can capture this really quick. Okay. This is 11:30 right here, between 11:30 and 12. Same time frame. This is between 11:30 and 12. NQ was not making new lows while ES was making new lows. NQ is the leader in this market right now. You've got to pay attention to its cues and what it's doing, because it is dragging ES around by the nose. The same token this morning, if you don't see NQ out of the gate, right, you see ES hitting new highs, and you see NQ getting responsive sellers out of the gate, watch out for the new highs if you're long for whatever reason. Obviously, it's not going to be in my trade plan, so I'm not worried about it. But if I see NQ pushing lower and ES pushing higher, to this point, ES has been the winner repeatedly. Same token, ES starts hitting new lows, NQ's not hitting new lows. That's going to be of interest to me. I'm going to watch and see if that develops into a low for the day, right? And I'm going to see if I can't get ES to push back up to the other side. Again, the edges have constantly been the best, with strong rotations, have been the best place to place trades. So at any rate, that is what we are looking at for this morning. I really expect a balanced market. If I get something different than that, I'll obviously change off of that. But I don't necessarily expect us to, it's quite possible that we simply get balance all day. The 9 a.m. news will be the tell, right? And then I'll be looking for various traps to set up. Also, if you go to a 60-minute chart on this, I have 4 minutes left, so I'm going to finish this up here in just a second. Okay, you can see